and welcome to today's Little Green Pharma Investor webinar. I'm David Tasker and I'll be hosting today's session with Paul Long, Group CEO and Director of the newly combined LGP Cannatrek Group. Today's focus is Paul's update following completion of the merger with Cannatrek, including the strategic rationale, integration priorities and growth opportunities across Australia, the UK, Europe and other regulated medicinal cannabis markets. A quick reminder that today's presentation is for information purposes only and should be read alongside the company's ASX disclosures. It is not financial advice. Please submit questions through the Q&A function at any time and we'll get to those after Paul's presentation. With that, I'd now like to hand over to Paul. Paul, take it away.
Thank you, David, and good morning, everyone. Special welcome to our Cannatrek shareholders that are joining us for the first time. Thanks, David. We'll jump through to slide 3. I'd like to begin with just a bit of an introduction to both businesses for those who are across the story. But on the Little Green Pharma side, the baseline of our business is a large GMP manufacturing site in Europe. It's a 21,500 square metre cultivation and 4,000 square metre post-harvest facility. So it's a significant site. We acquired that from Canopy Group just over 4 years ago now, and we own that site almost debt-free inside the current environment. So it's a significant site just 2 hours from the German border, and one that we have already invested significantly in, and really we have an opportunity now under the new LGP Cannatrek framework to really scale up that site itself. Our European footprint on the Little Green Pharma side has been significant across 11 different countries, but a real focus on Germany, France, UK, Italy and Poland. And Little Green Pharma have been the biggest supplier, in fact, one of the only suppliers into the French trial, and that is anticipated to roll into a full registered framework later this year. On the financials, Little Green Pharma last financial year reported a $36.8 million revenue with an adjusted EBITDA of $2.9 million. 4 brands across 33 different products in the Australian market. We also had and have a craft indoor facility in Busselton in Western Australia. On the Little Green Pharma front, one of the things that we've done over the last 9 years has been invest into the clinical side of our pathway, and that has borne fruit in terms of how the data we've been able to capture. And I think in this more heavily regulated markets, we're starting to see in some markets that will hold us in good stead. On the clinic front, Little Green Pharma currently operate a medicinal cannabis clinic called MyQuest, which will now roll into the My Eden pathway that exists on the Cannatrek side. So the Cannatrek business, for those who are not overly familiar, to do a very quick update, they've got one of the largest GMP manufacturing sites in Australia, over in Shepparton. Cannatrek have been able to build brand exceptionally well inside this market. So not only just the single largest selling brand in Australia, but a very large brand, Cannatrek in its whole, with over 72 products in the market. The team on the Cannatrek side are really best in class on a number of areas, but I'd point out in particular the product development side over the history of the business, but also the commercial team as well and what they bring to in particular the Australian market. On the revenue front, the last reported financials were 75.5 million of revenue and an adjusted EBITDA of 10.1 million and a cash reserve of 12.5 million. The distribution business is a B2B business for Cannatrek called Greenship, and as I mentioned, the clinic My Eden is in a similar size and scale to MyQuest, which will provide an interesting opportunity for us to scale into that operation here in Australia. Combined, the LGP Cannatrek Group deliver a profitable business that's generating cash with a very strong balance sheet and the ability to really fuel and accelerate our growth into the European market, which is where we see the opportunity and what I'll be talking about today. Thanks, David. If we jump in and have a look at the financial overview at a really high level, and these are our pro forma numbers, and obviously we'll be reporting to the market what our numbers look like as that happens in the coming quarters. But from a pro forma perspective, it's a really strong position. So a combined FY25 of 112 million of revenue, 13 million of EBITDA, 15 million of cash at the date of the merger, and 136.7 million in net assets, made up of 85 million from Little Green Pharma in assets and 51.7 from the Cannatrek side. So clearly this slide here is something that significantly sets us apart in this market. I think if we look at scale and the consolidation piece that we've been able to pull together from Cannatrek and Little Green Pharma, this slide really emphasises our ability to capture scale now and deliver and fuel the growth up into the European side of the business. Thanks, David. The synergy capture is one of the important strategic pathways for us, but this slide steps us through the three-stage strategy to actually build out our plan to build the business into a global foundation. So phase one really is in the next 3 to 6 months, and these are really our high-level core focuses as a business. So completing an operational integration through our post-merger integration team has so far been very, very successful and on time, and will continue in this period. Capturing the synergies inside the business that exist will be critical. So we believe that'll be north of $3 million, but that will certainly play out in the coming months. The board has approved a capital investment inside the Danish facility, and that will really initially be a phase one to drive both yield and efficiency in our product and improvements in the final finished quality of the product that's coming out of the Danish site. We have also had board approval to recruit country heads in both Germany and the UK. So stage one of our growth will be investment in people and getting those senior commercial heads sitting inside both the German and the UK market will be critical for the scale up of our own brands inside those high moving markets. In the UK, we'll be actively looking, and we are actively looking at investment inside clinic, whether that be an acquisition or through joint venture or through organic growth. We're actively looking at multiple options inside that market. And in Australia, the focus not only in this phase one or the next 3 to 6 months, but well and truly beyond, will be to ensure that we have this sustainable cash generation of a business that does fuel that growth, and Australia gives us that capability. Then by the end of financial year 2027, and I remind everyone we work off a March year end. So for us, these will be the top 3 things that we are working on as a team to invest in that European growth and into the UK. So the first stage of investment into the Danish facility has been signed off by our board just recently, and that will give us a step change in quality. So some really simple things inside that site, investment in some equipment that will give us some quality increase and how we're drying and curing our flower, but also will give us the capability to actually scale that site. As I mentioned earlier, we're up to about a capacity at the moment, or production capacity annualized, of about 7 to 8 tonne. The nameplate on that site is higher, that is probably a bit closer to 20 tonne. But I think with the correct investment in both yield and optimization of that site, it could be beyond the 20 tonne. So that first stage of investment really just enables us to fill out the rest of the rooms and scale, so we've got the capacity for the growth inside our forecasts. On the UK asset, within this next phase, we would have made the acquisition and/or chosen our pathway and be scaled into clinic. That's clear as a part of our strategy. We see that owning the script at the front end via the patient through a clinic is critical, particularly in those early mover markets. So we've got a clear plan to execute on that. Inside the UK and Germany, as these fast mover markets, it's critical we get our product mix correct. So within the next 12 to 18 months, we will have a range of between 10 to 20 SKUs in both of those markets. Historically, the exposure to the European market from LGP there's been an element of our own brand, but primarily it's been through partnerships where we've white labeled product in. So we'd like to, over the coming years, slightly adjust that mix. We will continue to focus and invest on the opportunity through partnerships. But clearly we like the idea of capturing more market share through our own brand. So that will be critical in both the UK and Germany. So during that time, we'll also look to scale up the commercial arm of the business. So the German side will be very much more focused on direct-to-pharmacy model for our brands, whereas the UK side more around what we see in Australia, which is growth through clinic partnerships. But both of those will be done through key headcount hires within the sales, education, and commercial side of the business. And then in France, there's a number of other markets we'll be working on, but one that I'll highlight on this slide is the French opportunity. So we anticipate, as I mentioned, by the end of this year, there'll be a pathway, and certainly the start of next calendar year, we expect to have product sales into the French market. And then I guess if we look at the scale phase of our strategy, our three-stage strategy, the second stage of our Danish CapEx program will be more about running some trials in the coming 12 months to look at other ways we could increase yield. So that site, eventually, if we execute to our strategy, we will get to the nameplate of 20 tonne in the coming years. So how do we expand that? How do we further increase quality? How do we actually drive cost per gram as one of the core foundations of that site to ensure that site is cost competitive globally in this market? And that's a big part of the strategy we're working on now that we'll be implementing through that stage 2. The growth through market share in our core markets. So our core markets really are Australia, Germany, and the UK. So we'll continue to look at core market growth, both organically or via partnerships and or via M&A. And we've added North America on that slide for a reason that we believe there's an opportunity in this market to consolidate when the time is right for our business inside the North American market. And then high barrier markets is the next investment for us in the longer term. And that for us is about cementing the leadership that we have. So the opportunity that we've developed in countries like France and Italy and Poland is we've been early and early mover, the ability to cement that early mover advantage into core market positions. So in time, we'll see our high barrier markets move into core markets. So our core markets will go from Australia, Germany, UK, and then next year we'll add France and Poland, and we'll scale up in our core markets. And then coming in behind that, we'll have emerging markets that we're spending less time on actively at the moment as a business, but we're still looking at opportunities and exploring opportunities to emerging markets. And a good example, or two good examples, are Denmark and Spain. Thanks, David. A key to success to implementing our strategy will be team, and certainly a part of the logic behind the merger with Little Green Pharma and Cannatrek was the team. So the team we see on slide here is our executive team. Without going through person by person, but we have a very deep cannabis expertise combined on screen here in our executive team. But not only cannabis, what's really quite interesting and unique is a track record in success across other global industries. And that's across marketing and finance and operations and legal and the technical side of the business as well. So, and sitting behind the executive team, our senior leadership team have a wealth of category experience and which is really going to be mission critical for implementing our ambitious strategy. Thanks, David. So as I mentioned previously, our core markets are Australia, Germany, and the UK. So I just wanted to spend a couple of minutes on this slide talking about where we see these opportunities. So firstly, Australia, this is absolutely our core. This is a big market, $1 billion in sales by the end of calendar 2025 is a very big number. And we can see that number, we can see the size of that market. But I will emphasize is that we have seen a bit of a slowing of that market. So that means that the strategy needs to be slightly different and focused on scale and consolidation. Hence, one of the reasons why the merger made a lot of sense inside this market as well, is because we can see if we remove ourselves from the cannabis industry and say what happens when we see emerging industries moving from a shakeout period into a period of maturity, we typically see that 3 to 5 businesses dominate sort of 70 to 80% of the total market. So we clearly have put our hand up and said we want to be a consolidating business. and in the Australian market, whilst we think that the top line growth for the overall industry is slower in Australia, we still see a significant opportunity for us to continue to drive our strong market position down here. In Germany, there has been a really big expansion in the last 18 months, and that was driven by the April 2024 Cannabis Act. There are some regulatory headwinds inside the German market with the MedCan-G changes potentially coming inside that market. But we've leveraged that growth inside the German market as Little Green Pharma now for the last couple of years. Primarily, as I mentioned earlier, that's been done through partnerships and white labels. So we've delivered significant tonnage into the German market under other brand. For us, that's a core part of the operation. And for us out of the Danish side, we have the capability and scale to continue to do that. And it also enables us to bring our average cost per gram down, which is mission critical as we enable and grow our transition inside our forecast and budget to drive more own brand. So that'll be both Little Green Pharma and Cannatrek brand portfolios inside that German market. The UK is a really interesting one in that it is now following you can see now it's following a similar curve to what we saw early on in Australia. So it's off a very low base, but the most recent data shows that there's 140,000 patients now inside the UK market. So what's interesting about this opportunity, it really does feel like the time is now. So the timing of this merger, the timing of our investment in growth capital up into the UK market is really mission critical. I'll expand a little bit more about that on the next slide. Thanks, Dave. So the way we look through our strategic framework is through these 6 key pillars that we can see on screen now. And so pillar 1 of these is just a pure rigorous cost management view on the business. And this is, I can't emphasize this enough, in that this in our industry has perhaps been under looked at across multiple businesses. So what we deliver, what we can deliver, the track record of the business, the track record of the incoming team that we've seen from the Cannatrek side, we believe can deliver pillar 1. And pillar 1 enables us to fund our global ambitions for growth and shareholder returns. So mission critical that we're absolutely focused on our cost management and resource optimization. And so it's a big part of what the team are executing here in Australia. Pillar 2 is about scaling our European advantage. And so our Danish side is one in which it is the biggest site in Europe. It's the biggest cultivation and manufacturing site in Europe. I'd like to describe where we on the Little Green Pharma side got that site to with the investment and capabilities we had, we got that site to scale up to 7 to 8 ton, and it was producing decent quality flower that the market was accepting through growth, in particular in the German and some into the UK market. But our advantage moving forward is the capability to take this site to the next level, to scale this site up to 20 tonne and beyond, to scale this quality up to a 8 or 9 out of 10, and to scale down our cost per gram as we do all of those things. So it's a huge driving force and a pillar inside our business that's implementing that. In Australia, as I mentioned, there is certainly a slowing down of top line growth inside this market. So there is a bit of a hold serve strategy under pillar 3, but we still do believe that scale and consolidation is important. We still believe there's some white space in products, so innovation through new products and accelerating clinic growth with our 2 clinics in My Eden and My Quest coming together and implementing a strategy inside pillar 3 to continue to own our own pathway through clinics. And sustaining our leading market position is really critical to the future strategy in pillar 3. Pillar 4, winning in Europe, is really where the big focus of our strategy is, and I've spoken in this presentation about this. But for us, inside the European market, it's absolutely about gaining talent, clinic expansion, and bringing product to market as well would be the key, particularly through those early mover markets. So the established markets of Germany and the UK, those early mover markets, France, Italy, and Poland, is we're spending less time and less investment in those markets. However, we've got a unique opportunity, particularly in countries that require dossiers for submission, and France is a really good example. Poland's another one, where the detail of what's required to submit a dossier and get product registration we're one of probably only a small handful of companies in the world that have got that capability at the moment. So we'll continue to exploit those opportunities through that capability. Into pillar 5, and this is one through scale, through partnership is critical. Both businesses have been very successful in building very strong partnerships, and that will be really important, particularly with our scale into Europe. But M&A is other really interesting opportunity, and for a couple of reasons. I think the track record and experience of M&A now on both sides, both businesses have effectively and efficiently brought other businesses in and scaled them in through integration and successfully scaled those businesses. So that's clear. And I think that the team we have, both at an executive level and a board level, give us the capability to confidently look at M&A opportunities when the time is right for the business. And I certainly emphasize that. But we do believe that our market is in an interesting opportunity where there are some really interesting and reasonably priced M&A opportunities in this market over the next 12 to 24 months. And pillar 6 is one that I think is really critical, and we've elevated this into our strategic framework recently around using data and technology to outperform. I think the investment in this space means that we can really push ahead in terms of how we see the market, how we view the market, how we react to opportunities, both here in Australia and up in Europe. Thanks, David. So the last slide here is just pointing out the key 5 catalysts for our value creation as we scale the business. And so for us, as I mentioned, is profitable foundation and self-funding. Our base for investment into sustainable growth is actually very unique inside this market. Building synergies to materialize inside the business are critical. So I mentioned before that we expect more than 3 million. That's primarily made up of just pure synergies inside the business. That were some cost savings as we brought the businesses together, some headcount savings, but there are some supply chain synergies that we will continue to work through in the coming months. And they are things like manufacturing inside the Shepparton facility, transitioning the little Green Pharma manufacturing across to the Shepparton site, and there's a significant synergy saving to that one action. Another action would be to look to bring our cultivation supply chain pathway on the Cannatrek side in through the Danish side, and again some significant cost synergy savings to be had by the businesses, and we believe that we'll be able to show those catalysts in coming reported financials. The timing, I think, is really, really important. I think we can see that the European market will target this much bigger growth by 2030. We can see 10 billion euro there on screen, and we do believe that we've got the right strategy, the right focus, the right team to capture a significant part of that market. It's a proven team, it's a proven track record. We have got a big part of the Australian market. We know how to drive brands inside these new markets. And so for us, the timing feels really mission critical for our value creation. The team, as I've mentioned, have a very deep expertise and combined knowledge, both external and internal to the market, and with that absolute focus on cost and management control. And then the last one, as I've mentioned, is cost management. The consolidation and track record will, as we see this market move into maturity, we'll see more and more opportunity as we move from shakeout into this more of a general market update and opportunities we will continue to look at as a combined business. That's a summary today, and I hope there's a few questions that have come through, David, and very, very happy to take them on board. Thanks, David.
Thanks, Paul. Great presentation and a stack of questions. So we might just jump straight into them if that's okay.
Yeah, of course.
So in terms of the Denmark CapEx, what exactly is the quantum, phasing and expected returns? And then probably more importantly, can the business fund it out of working capital?
Yeah, sure. Yeah. So there's a couple of stages. So stage 1 is just under 2 million of investment. And really that is the simple efficiencies to sort of scale up. So one of the examples is a soft touch trimming machine that we'll be purchasing, and that should, in theory, bring down our costs in that site with headcount. But it also gives us room conversions just to scale up. So we've got a couple of rooms that we'll just convert with the other rooms, which gives us now the ability to scale up. So that sort of 1.8 million has been approved by the board and will be progressing. Stage 2 is more around improving yield and being, long-term cost competitive on a cost per gram. So, and most of that stage 2 will be connected to trials. So we'll run some trials, and one example is we'll run some trials on different lighting and under canopy lighting and additional above canopy lighting to see if we can improve our yield. So some of the yield improvements we've seen in lighting could be up to 30% increase in yield. So if our nameplate on capacity is, say, 20 million tonne out of that side, and we can put an investment under stage 2 to get a 30% increase in yield, the nameplate increases significantly. So there's a bit of work to be done more in trials, but we'll only confirm that investment in stage 2 through quite rigorous plans to run trials and actually then present back to the board to get sign off. And sorry, second part of that question was, can it be funded? Yes. It can be funded out of working capital. So at merger, we had 15 million, and we're a business that's generating positive cash flow. So we're being very conservative on how we're signing off on these things, and we do have the capability. And I'd also mention that we've got significant capacity for debt if required as well.
We're seeing a lot of Canadian groups coming into Germany, coming in or even expanding in the German market, having over time left that market. So they definitely see the opportunity in Germany. Why do you think LGP and Cannatrek are going to win in this market?
Yeah, so we are. I think there's definitely there's some interesting changes coming. There was some news just a few days ago actually on the importance within just one of the jurisdictions in Denmark around the importance of GMP pathway. So a lot of the Canadian products coming in as GACP flour which is not GMP flour, arrives non-GMP, and it's being essentially packed off as GMP into that market. Now that is a pathway, but the recent news came out of one of the territories in Germany. It was the Hesse State Office for Healthcare, and they significantly tightened or indicated a tightening of that GACP pathway. So our Danish GMP site is, as I said, 2 hours from the German border, EU GMP product that we can deliver into that market. So I think that could be interesting if we see some changes inside the German market in particular. The other interesting thing about our site is that it arrives in pharmacies within days. So from harvest to post-production to then delivery from site, it can arrive within days, whereas a lot of the Canadian products is weeks and if not months before it hits the market. So we are driving that message, and we're getting quite a bit of positive feedback on time from harvest to delivery to the patient is one of the unique advantages. And, I think it's important I've mentioned this before, but it's important to note inside the Danish framework at the start of this year, there has been a regulatory change that may enable us to provide more services inside EU to other companies looking for sort of import or pack off or a distribution hub inside Europe. So yeah, we think that we're well positioned, and we also think that if we scale correctly with the right investment, which I've outlined today, that our cost per gram becomes pretty competitive as we scale that side up with the Canadians as well.
You mentioned in your presentation, and there's a few questions on this, $3 million of cost synergies. Can you expand on what these synergies are? And do you see non-cash synergies as well as clearly cash synergies?
Mm-hmm. Yep. So the headline synergies for us, really, on the cash side are the duplicated, listing costs. So that one board, one auditor, one registry, one lot of insurance. But there was also a round of staff redundancies for duplicated functions inside the business, which brought some synergies, and just more consolidated corporate functions as well that we've just aligned on one function. So that's where we saw the number that I've outlined in the presentation. But yeah, look, I think there are a number of other synergies. I think I mentioned the Danish capability to deliver Cannatrek product through products out of Denmark, the optimization of the Shepparton facility, as I mentioned, the clinic scale and network, but also even the capability to cross-sell inside the market at the moment. So we've taken the view, and certainly Cannatrek's position inside this market, and Little Green Pharma for slightly different reasons. We we think the cannibalization of product is actually quite limited. I think the products sat together really nicely. That was part of the due diligence that both companies did leading into the deal. And we can now see that opportunity. We've got, if not the biggest, I think it is the biggest education and medical science liaison team now in the Australian market, and the ability to sort of cross-sell. There's some really interesting opportunities through clinic partnerships, as an example, that don't have Little Green Pharma products on their formulary that we can scale into. So we should expect to see those opportunities, particularly down here in the market, for sure.
Probably a bit of a tough question, but you probably had to expect it. Why don't you think the market is rewarding the deal, and what are the re-rating catalysts?
Yeah, look, I think probably my thoughts and overall comment is that I think the market will reward us for delivery, not just announcements, and we're very much head down and focused on delivering results for shareholders, and we think that will follow. I think the timing of the deal around towards June and some tax selling off played a role. There was definitely, whilst we had a decent amount of the register in escrow, there were some smaller holders on the Cannatrek side, I think, that had been sitting in a private vehicle. So, it's obvious that we would have a bit of pressure from that. I think the value creation is still in front of us. So I think, it's about obviously showing the market, delivering to the market, showing what we can do. And I think the catalyst, second part of that question, the catalyst for our, for reward would be, an increase in share price would be, we could showing the market that synergy capture. So, through the data, I think, investing up into the Danish site and having this absolute focus on cost per gram and actually showing a measurable capacity increase will be important. And, I think, traction under our own brand will be really, really critical. So particularly those high moving markets, the focus markets of Germany and the UK, and bringing on those key people and driving our own brand inside those markets are really important. And, I do think we'll, even on the white label side, we'll continue to see some really interesting catalyst opportunities in some of the discussions we're having at the moment. So I'd certainly be watching out for a few of those. But I think, the rarest of attributes in our industry probably is our ability to self-fund our growth, and I think that will continue to be one of those key catalysts. So I think, the message is on the share price, we're all vested in this. We've got, a board that's vested, a team that's vested. We understand the importance of share price, and particularly under our strategy for M&A. We know that is critical, and we know we want to capture shareholder return, and we know we want growth. The overall market has been challenging, and for us, I think if we continue to deliver results, not just make announcements, I think, we're building a business that we think we can, build long-term value for shareholders.
And how quickly do you think those synergies will start to be realised, and how proactive will you be in informing the market as those synergies are being realised?
Yeah, I think the synergies, the dollar synergies will be captured by reported financials, David. So I think we'll, as those synergies become available, the financials are reported, we'll be reporting those to the market. And then as we update the market on the broader synergies, if there's anything that's obviously material to the market, then we'll be reporting that to the market as we need to, immediately. But I'll continue to run regular presentations back to our shareholders to inform them of how we're progressing with the catalyst to those synergies.
And in terms of the Shepparton facility and capacity, is that underutilized, or is there some efficiency gains there?
There's definitely scale opportunity there. So on the Little Green Pharma side, we use third parties at the moment for a percentage of our manufacturing pack off, our GMP pack off in Australia. So we're in the process of transitioning that across. But even from there, there's quite significant opportunity in scale. And whether that's under our own brand or whether that's for third parties offering that service as well is something that we're looking at quite actively at the moment. But yeah, the scale there is significant. It's a wonderful site. I think it's if not the biggest, one of the biggest in the Australian landscape, and the investment made in particular of the capability through the Schedule 8 safe is just enormous. So yeah, I think there's more opportunity now, and as we continue to look at consolidation opportunities, the bolt on into that side is just obvious.
You touched on during your presentation the potential, as part of your strategy, potential for further M&A and partnerships. Is the immediate focus the integration of the two businesses, or are there already opportunities you're watching?
Look, we're definitely looking at opportunities that, like I said, the timing has to be right, and part of that, we have to look at our current market cap and position to ensure that a deal would make sense for us. But we are actively looking. It's a core pillar of our strategy, but the absolute focus at the moment is post merger integration and growth inside the European market. So it's been roughly a month now. The strategy has been built. We're working with our team now to sort of go bottom up and implement that strategy. The way in which I run and will implement the strategy within the team will be a 12-month plan, but broken down into 90-day cycles around execution. So very, very execution focus. The absolute focus is on business implementation. But yeah, we'll continue to always look at opportunities, because I think there's a moment in time in this market where the global markets are undervalued, and there certainly feels like opportunities out there for sure.
Now, I don't want to put you into a forecasting position or breaching any of the listing rules, but there are quite a couple of questions here in relation to dividends. So Cannatrek paid dividends the last 2 years. Is that something that the enlarged business is looking at, or does it have other priorities for its cash at the moment?
Look, I think it's not something we've discussed yet. We've had one formal board meeting, to be honest, so it'll be on the agenda. But if we look at our growth strategy, I think the investment in the growth opportunity would provide significant shareholder return for us inside that European growth strategy. So that will be an absolute core focus. But yeah, look, I think it's something that will be addressed at a board level, and at the right time, we'll communicate that back to shareholders.
And in terms of current sales and projections on how the business is going, how generally, obviously, I don't want you to forecast, but generally, how are sales tracking?
Yeah, roughly on track, David. I think the Australian market, as we mentioned, has been a challenging market across the board. So we've been roughly on track with what we expected inside the Australian market. The bottom line return inside this market has been exactly what we've been expecting, which is mission critical for growth. The European opportunity can be a little bit lumpy because it's quite early in some of those markets, but the established pathway through white label partnerships into Germany is through very solid partnerships. So we're in discussions with groups at the moment for capacity into calendar year 2027. So we're talking 12 to 18 months away. So that gives us a really good solid foundation. And then we've built what we think are quite conservative forecasts, which obviously we're not announcing to the market, but internally our forecast over the next 2 to 3 years for both the UK and Germany, relatively conservative, but we think we can put our combined company in a position to capture some really good market growth inside those two markets.
And how important is the Australian business as a cash generating base to fund the group's international growth strategy?
Yeah, I think I've probably answered that one in the preso. It's mission critical. So I think between LGP and Cannatrek, we're now one of the biggest brands inside this market. We know the Australian market is significant. The opportunity to continue to capture bottom line return to drive the growth is absolutely critical. I can't emphasize that enough. That's why pillar one of our 6-pillar strategy is absolutely focused on that, and why for me personally, the incoming Cannatrek team and their ability on the finance and execution side to drive the discipline around that pillar is just mission critical to the future of the combined business.
There's a couple of questions here around people, and you've touched on it broadly in the presentation and even in your answers there. When you bring businesses together, there's always hard decisions, and there's headcount losses and the like. How well do you think that integration is occurring? And then how do you gel the team and the board to drive the business forward?
Yeah, I mean the deal to get to where we got to a month ago to close the deal, it was a relatively long journey, probably longer than we all would have liked. But what it did do is at a senior board level really tested out the culture and the relationship. And I think we came out. You come out of those processes with a few bruises, but we came out super strong and very, very well connected. So that's been a huge advantage. And then as we then go to the layer of our teams, I wouldn't say it surprised me, but it's been the synergy between the team, the connection on culture has been quite phenomenal, actually. So I think, yes, we had to make some difficult decisions as the businesses came together, and that's never easy, but it was those were the right decisions where we had double ups. And yeah, we think we've got best team in market, and for us around how we pull that team together and implement a strategy and understand what our values are and drive for growth is critical. It always has been under my leadership at LGP. And in fact, I'm on a plane to Melbourne today, and we've got a day tomorrow where we're pulling the broader senior team together to ensure that we're all aligned on team strategy, values, mission, and vision. So that's mission critical.
And what does the group headcount look like now?
So the total headcount in Europe the Danish site's just under in the 40s, I think about 45 headcount. We've got 3 people in the Berlin office, but we'll be scaling that up to 5 or 6 or 7 pretty soon with that investment. And on the Australian side, I think we're sitting at a similar number as Europe, so around about the 50 headcount in Australia. What we did do in Australia is we took some synergies on. What we decided not to do was take away anything particularly from the medical science liaison on the sales side. For us, that's critical, and that share of voice out there in this market, particularly a market that's not growing kind of double digits for the industry. It was mission critical that we captured and maintained and actually grew our share of voice out there with doctors. So we've kept a really solid team out there.
May not be able to answer it, but I'll ask it anyway. What are the plans, if any, for the production facility in Busselton?
Yeah, so I think we announced to the market last year that we were working with a third party to essentially support the manufacturing. So that party has actually transitioned that site now into a craft facility. So we own the property, and we own it with just a very small amount of debt now, and we continue to take product from that third party down there. The transition to craft has now happened, so our first range of craft products are about to hit the market, or maybe they just have. And so these products are akin to the genetics that have come out of North America. That they're 21-day cold cured, they're hand trim only, and placed in beautiful glass jars. So it's meeting the end of the market where the higher dollar per gram in a retail sense or in a patient sense sits. And given that site only has a nameplate capacity of, call it 1.3 ton, it has to sit in that zone where it's in that craft. Or in that sort of $13 to $15 retail is where that needs to sit. So that transition has happened, and from our side, the partnership down there is really strong. The quality of the flower is great, and we really look forward to seeing how those new products go in market.
Last couple of questions. You touched on a little bit in the presentation, but what are the key milestones investors should watch for over the next 6 to 12 months?
Yeah, look, I'd certainly captured in that last slide. So I think that we'll see synergies flow through, and for us, there's an absolute kind of focus on delivering, not just making announcements. So for us, we want our actions and our numbers to show the market that this is what we're delivering. So I'd be really just watching out for those quarterly results and how we're tracking and performing, the synergies we're capturing. But I think if we look inside the European markets, it's absolutely about growth opportunity. So the opportunities inside the German market, the conversations we're having right now that'll give us scale into 2027. We'll be reporting those to the market once they become available to do so. The scale that we see out of the Danish side, and as we continue to invest in there, that will be critical. We are looking for opportunities to either JV or scale into the clinic side of the UK market. So they're active discussions. I'd be keeping an eye out for those as kind of major catalysts. And and again, delivering on the results long term will be absolutely critical.
Well, that does bring us to the end of our questions. Paul, thanks for the presentation. Reminding everyone, this is a business with a full year 25 revenue of around $112 million, adjusted EBITDA of around 13 million, cash flow positive, generating cash, and a significant cash holding, and a clear strategy on its plans to integrate the business, but also grow its combined market share in the key markets in which it operates. Thanks, Paul, for your presentation.
Thanks, David. Thanks, everyone, for joining.
And thanks, everybody, for joining today. This presentation will be sent out to everyone and available via the Little Green Pharma website in the coming days. And we look forward to watching the business execute on its